Well, dear learners, I welcome you all in the session on final accounts. So far, we have discussed about the adjustments while preparing the financial statements of the business. So now we will see that while preparing the financial statements of the business, how these adjustment will be dealt, because discussion on adjustments on different items while preparing the financial statement is one thing, but when we practice such things, then of course we need to see it thoroughly what will be the impact of adjustments on the preparation of the financial statements. So let us now discuss with the help of a very comprehensive example, and I am sure that with the help of this example, the students, the learners will be very clear about the adjustments or adjustments of various items while preparing the financial statements. So here, dear learners, we have been provided with the trial balance of a particular business concern. So here the trial balance is given. As we all know that there are three columns in a trial balance. This is the first column, and this is known as the particulars column, that is the detail of the accounts is given, like capital account, sales return account, and the second column belongs to the debit balances, and the third column belongs to the credit balances. So here let us see one by one. So capital account, so capital account has a credit balance, so therefore we have a credit balance of capital of rupees 5 lakh. Then sales, so sales is a revenue for the business, and all the revenue have the credit balance, therefore the sales has a balance of rupees 10 lakh. Then sales returns, so sales returns has always a debit balance, because the sales have a credit balance, so therefore the sales returns will have the debit balance of rupees 25,000. Then the next one is purchases, so purchases have a debit balance which is of rupees 5 lakh. Then purchases returns, so purchases returns will have the credit balance of rupees 15,000, because purchases have a debit balance, therefore purchases returns will have the credit balance. Then the next one is inventory as on 1st January 2018. It means this is the opening stock which we have been provided with. Opening stock is of rupees 60,000. So as opening stock is an asset for the business, and assets have always a debit balance. Then land and building, so again land and building is an asset for the business, and all the assets have a debit balance, so we have a land and building of rupees 4 lakh. Then the plant and machine, so we have plant and machines of rupees 3 lakhs. Then furniture, we have furniture of rupees 1 lakh. Wages, is an expense, so all the expenses and losses are having a debit balance as per the nominal account, therefore wages account we have a debit balance of rupees 50,000. Then carries inwards, it means the expenses which we have incurred in order to bring the goods from the place of purchase to the godowns. So therefore whatever amount which we have paid in order to bring the goods from the place of the purchases to the factory is called as carriage inwards. So again it is an expense for the business, and it has a debit balance of rupees 10,000. Then the next one is provision for bad debts. So provision for bad debts is given 7,000 rupees. So this is what we call the old balance, old provision. This is also known as old provision regarding bad debts, 7,000 rupees. Then carriage outwards, uh, 5,000 rupees. So carriage outwards is again an expenses. It means these are the expenses which we have incurred on selling the goods, or while going out the goods from the factory to the place of sales, 5,000 rupees, because it is again an expense and all the expenses will have a debit balance. Then cartages. So cartage, again it is an expense for the business. It has a balance of rupees 5,000, which is shown under the head debit balances. Salaries. So salaries again is an expenses for the business, and we have debit balance of rupees 40,000 as far as the salaries are concerned. Then the loan. So loan is a liability for the business. Therefore, all the liabilities will have a credit balance. So therefore, the loan has a credit balance of rupees 2.6 lakh, that is 2,60,000. Then debtors. So we have a debit balance of rupees 1,50,000 of debtors. So debtors being an asset for the business, and all the assets have a debit balance. So therefore it has a debit balance of rupees 1,50,000. Creditors. So creditors being the liabilities for the business. So all the liabilities will have a credit balance. So the creditors have a credit balance of rupees 70,000. Then the rent. Rent again, it is rent received. It is rent received. So rent received may be there, or rent paid may be there. So if rent paid is there, it means it is an expense, so it will have a debit balance. But if it is a rent received, it means it is a credit balance, and it is an income for the business, and this must be shown in the credit side of profit and loss account, because rent credit balance is given. This 8,000 is a credit balance, so that shows that this is rent received, and rent received being an income for the business must be shown in the credit side of profit and loss account. Then the next one is bills receivable. So these are the bills receivable, which is an asset for the business, and being the asset, it must have a debit balance, and it has a balance of rupees 40,000. Then acceptances. So acceptances are the liabilities for the business. So if all the assets have a debit balance, all the liabilities will have a credit balance. So we have an acceptances of rupees 10,000 shown in the credit balances of the trial balance. General expenses. So general expenses being an expenses for the business, it must have a debit balance of rupees 20,000. Then rent and rates. So we have paid the rents. So this is an expenses of rupees 10,000. So all the expenses have a debit balance. Therefore, it is shown in the debit side of trial balance. Investments. So investments are asset for the business, and all the assets have debit balance. Therefore, it has a debit balance of rupees 50,000, which is shown under the head debit balances. Cash in hand is again an asset for the business. Therefore, it has been shown under the head debit balances. Then the bank overdraft. So the bank overdraft is an liabilities for the business. Therefore, all the liabilities will have a credit balance, and the bank overdraft has a credit balance of rupees 10,000. Then the next one is discount. So here discount received may be there, or discount allowed may be there. So if it is shown in the debit balances, it means we have provided the discount to our customers. So if we have provided the discount, it becomes an expense for the business. Therefore all the expense will have a debit balance and has been shown under the head debit balances. Then bad debts, the amount which we could not recover is called bad debts. So it becomes a loss for the business, and all the expenses and losses have a debit balance. So it has a debit balance of rupees 5000. Then the last part of the trial balance, interest on investment. So investments are the assets for the business, therefore the amount of investment has been shown under the head debit balances, because the investments are assets and all the assets have a debit balance. So if we have earned interest on those investments, it becomes the income, or revenue for the business. So therefore all the incomes have to be shown in the credit side, because all the incomes have a credit balance. So it has a credit balance of rupees 5000. Then the interest on bank overdraft. So the interest on bank overdraft is an expense or loss for the business. So because the bank overdraft facilities we have taken from the bank, so definitely the bank will charge some amount on account of providing such a facilities to the business. So therefore if we are paying on account of availing some facilities, it becomes an expense, and therefore it must have a debit balance of rupees 500 shown under the head debit balances. Then goodwill 60,000 rupees. So goodwill is an asset for the business, and all the assets have a debit balance. So here we have a debit balance of rupees 60,000 as far as the goodwill amount is concerned. So the total of debit side of trial balance is 18 lakh 85,000. The credit balance of trial balance 18 lakh 85,000. It means both the side of the trial balance resembles. It means the arithmetical accuracy is there. There is no mistake as far as the arithmetical accuracy is concerned. Then after the trial balance, there are adjustments which we have been provided with. The first adjustment is the value of the inventory on 31/12/2018 on 31st of December 2018 was rupees 1 lakh. So here this is the closing stock, because this is the inventory on 31st of December 2018. This is the amount of closing stock of rupees 1 lakh. So the amount of opening stock we have been provided with inside the trial balance. Then the next one is depreciation is to be provided on land and building at the rate of 5% per annum, furniture at the rate of 10% per annum, and plant and machinery rupees 50,000. So this is the amount of depreciations we have to provide. Then the third one is further bad debts rupees 2,000. Provision for bad debts is to be maintained at 5% on debtors, and provision for discount on debtors at the rate of 2% on debtors. Fourth one is wages are outstanding to the extent of rupees 4,000, and salaries to the extent of rupees 3,000. So these are the outstanding expenses: wages 4,000, salaries 3,000. Then the next adjustment is rent and rates are prepaid to the extent of 1/4 of the amount paid. So these are the rent and rates are prepaid. So whatever amount of rent and rates have been provided inside the trial balance, 1/4 belongs to the prepaid. It means 3/4 belongs to this period and 1/4 belongs to the next period. Interest on investment outstanding rupees 1000. Then the next one is rent to the extent of rupees 2000 has been received in advance. So we have received rupees 2000 in advance as far as the rent received is concerned. Stock of rupees 20,000 was lost by fire. Insurance company only admitted the claim of rupees 15,000. So we have a loss of rupees 20,000 on account of lost by fire, and out of 20,000 insurance company admitted only rupees 15,000. So now we will prepare the trading profit and loss account with the help of the information provided inside the trial balance and outside the trial balance. So here the first one is opening stock. We have been provided the amount of opening stock inside the trial balance 60,000. It's fine enough. Then two purchases. So the amount of purchases is provided inside the trial balance 5 lakh, and the amount of purchases return is also provided inside the trial balance. So what we can do is that either we can subtract the amount of purchases returns from the purchases, and then the net amount of rupees 4,85,000 we can show in the debit side of trading account, or what we can do is that this amount of rupees 5 lakh, it means total amount of purchases 5 lakh, we can show in the debit side of trading account, and this amount of rupees 15,000 purchases return can be shown here in the credit side of trading account. So both are one and is the same thing. Students can treat it as per their own convenience. Then the next one is wages. Wages 50,000. So this amount of rupees 50,000 is provided inside the trial balance, and the outstanding wages of rupees 4,000 is also provided outside the trial balance. So the amount of wages outstanding will be added to the wages, and the total amount, that is 54,000, will be shown in the debit side of 54,000. So we can also show this amount of wages 4,000. So here, yes, this is wages are outstanding to the extent of rupees 4,000. So this 4,000, it will have its impact minimum at two places. One place, it will be added to the wages in the debit side of trading account, and then this amount of rupees 4,000 will also be shown in the liabilities side of the balance sheet also. So here we have added rupees 4,000, so total is 54,000. Then two carriage inwards. So this amount is provided inside the trial balance 10,000 rupees. Then two cartage, again this amount of rupees 5,000 has been provided inside the trial balance. So all these informations we have covered. Now we come to the credit side of trading account. Buy sales, we have been provided inside the trial balance 10 lakh, and amount of sales return is also provided inside the trial balance 25,000. So the net amount of rupees 9 lakh 75,000 has been shown in the credit side of trading account. Then buy inventory. So this is the closing stock inventory on 31st of December 2018. So the amount of closing stock is always shown in the credit side of the trading account, and because this amount of closing stock has been given outside the trial balance, therefore it will have its impact minimum at two places. So first, it is shown here in the credit side of trading account, and this amount of rupees 1 lakh will also be shown in the asset side of the balance sheet. So here the total of this credit side is 10 lakh 75,000, but the total of this debit side of trading account from this to this is this amount is short as far as the total of the credit side of the trading account is concerned. So this amount showing 4,61,000 is the balancing figure, and this amount is known as gross profit. So because we have to match the balance of the debit side and credit side, so in order to match the balance of this account, we have a balancing figure of rupees 4,61,000, and this balancing figure is termed as gross profits. Now this balance of rupees 4,61,000, which is known as gross profit, will be transferred in the credit side of profit and loss accounts, as you might be seeing here. Yes, by gross profit brought down. So this amount of 4,61,000 we have brought forward from the trading account. Then the next one is by rent. So rent we have been provided inside the trial balance 8,000 rupees. Then there is one adjustment regarding rent also. So we can see what that adjustment is. Yes, this is the adjustment. Rent to the extent of rupees 2000 has been received in advance. So it means that amount of rupees 8000 which is shown inside the trial balance, in that balance 2000 is included as rent received in advance. So therefore this rent received in advance is given outside the trial balance. Therefore this amount of rupees 2000 will have its impact minimum at two places. So first it will be deducted from the rent in the credit side of the profit and loss account, and this rent of rupees 2000 will also be shown in the liability side of the balance sheet, because this income we have received in advance. Any income which we have not earned yet but received in advance will be treated as a liabilities and will be shown in the liability side of the balance sheet under the head current liabilities. So here 2000 we have subtracted, so rental income is 6000. Then by interest on investment 5000 rupees. So it is provided inside the trial balance. So regarding this the adjustment is also given. So let's see what that adjustment is. Interest on investment outstanding rupees 1000. So this we have to deal with. Yes, interest on investment 5000 was given and outstanding interest on investment 1000. So total it is 6000. Now here 2 carries outwards 5000, it is given inside the trial balance. Then 2 salaries 40,000, outstanding salaries also have been provided outside the trial balance. Therefore outstanding salaries will be added and total this 43,000 will be shown in the debit side of profit and loss account, and this outstanding salaries of 3000 will also be shown in the liability side of the balance sheet. Then to rent and rate 10,000. So regarding this there was one adjustment, that 1/4 of this is uh, is treated as prepaid rent. So 1/4 is 2500. So less prepaid 2500. So net 7500 will be shown in the debit side of profit and loss account, and this rent we have paid in advance. So therefore this expenses which we have paid in advance will be treated as an asset and will be shown in the asset side of the balance sheet. To discount allowed provided in the inside the trial balance, it is an expense, therefore it is shown in the debit side of the profit and loss account. To bad debts 5000, add provision for bad debts 7500, total it is 12,500. Less old provision 7000, it is given in the question. So the equation is bad debts plus further bad debts. So further bad debts have not been provided, plus new provision we have already calculated. It is new provision is 7500. So bad debts plus further bad debts plus new provision, it is 12,500 minus old provision. Old is 7000, so net is 5500. To depreciation on plant and machinery 50,000 given in the question. To interest on overdraft, interest on overdraft is an expenses 500 given in the inside the trial balance. To depreciation on land and building 20,000, furniture 10,000, so total it is 30,000. So the credit total of the credit side of profit and loss account is 4,73,000. So but here the total of the debit side of profit and loss account is shorter than the total of the credit side of profit and loss account. So because we have to match the balance of debit and credit side, so therefore we matched it, and this is the balancing figure 3,07,000. Therefore this balancing figure becomes an amount of net profit, and this amount of net profit will be transferred to the capital in the balance sheet. So capital, we have been provided a balance of which 5 lakh. Net profit, as we have already calculated in profit and loss account, 3 lakh 7,000. So total is 8 lakh 7,000. And here long term liabilities, loan we have taken of which 2,60,000. Then current liabilities, creditors have been provided 70,000, acceptances have been provided 10,000 inside the trial balance, bank overdraft is also provided 10,000, wages outstanding 4,000 provided in the adjustment, salaries outstanding provided in the adjustment 3,000, rent received in advance, again it is a liabilities for the business, provided in the adjustment 2,000 rupees. So total it becomes 11,66,000. Now we come to the asset side. So first one is goodwill. Goodwill has been provided 60,000 rupees in the inside the trial balance. Then land and building 4 lakh has been provided. So out of this the depreciation will be subtracted, less depreciation 20,000, so 3 lakh 80,000. Then plant and machinery 3 lakh provided inside the trial balance, and depreciations we have calculated 50,000. So after subtracting the amount of depreciation from the concerned fixed assets, it becomes 2 lakh 50,000. Then furniture 1 lakh provided inside the trial balance, and we have calculated the amount of depreciation 10,000. So therefore the net amount of furniture after subtracting the amount of depreciation, it becomes 90,000. Investment 50,000 have been given inside the trial balance. Then the current assets, cash in hand provided inside the trial balance 50,000. Debtors we have been provided 1,50,000. So out of this the new provision will be subtracted. So new provision of rupees 7,500 will be subtracted, and accordingly 1,42,500 will be shown in the asset side of the balance sheet, because from the debtors we subtract only two things in the balance sheet. First is further bad debts, second one is new provision. Only these two things are subtracted, and if the provision for discount on debtor is also given, then this provision for discount on debtor will also be deducted. These three things will be deducted from the amount of debtors. Bills receivable we have been provided 40,000 rupees. Closing stock we have been provided 1 lakh rupees in the adjustment. Prepaid rent has been provided in adjustments 2,500. Then interest on investment was outstanding rupees 1,000, which was an asset for the business. Therefore it was shown under the head asset side of the balance sheet. So total it becomes 11,66,000. So the total of the asset side of the balance sheet becomes 11,66,000. The total of the liability side of the balance sheet also comes to 11,66,000. So both the side, that is asset side and liability side, both the side get resembles. It means that no arithmetical mistake has been committed. It means our final accounts preparation is to some extent it is fair enough. So this was all about the preparation of financial statements with the help of the adjustment. I am sure that this comprehensive examples must have clear all the doubt of my dear learners, and definitely this will be a very big boost for my students as far as the preparation of the financial statements is concerned. So I extend my sincere thanks for bearing with me. Thank you very much.